Let's get to that special guest in our studio. With the new government taking over, India's at the cusp of change, many believe. What should investors be watching out for next? While the budget is expected to be the next big trigger for the markets, what are the expectations from this new government in terms of policy reforms? Well, to discuss all of these issues and answer all of these difficult questions, we have with us in studio Dixit Joshi, Managing Director and Head of Equities for Asia Pacific at Deutsche Bank. Dixit, good afternoon. Thank you very much for joining us.
Hi, Menka.
Lovely to have you on set. You said in an op-ed, when we had the new government come in or be elected, ab ki baar 30,000, you stand by that?
Quite possibly.
Okay.
I would say, it is an exciting time for India. I just returned from Delhi. It was a real privilege to be a part of the event on Monday.
So you were at the swearing-in?
I was at the swearing-in. And again,
was?
Actually, it was quite awe-inspiring, if you ask me. I mean, very well organized, very well done. Very impressed, quite frankly. And again, a very exciting time in India.
Sure.
I think this time round, what we're going to see, I think, is some of the structural issues that need to be addressed, actually getting addressed in India for the first time in a long while.
Okay. Why is this election so important? And we all felt it was important, but the markets went up sharply on the day of the results, but then have kind of just kind of muddling along. So is there something, what's holding back the markets? I'm not asking you for a call in the Sensex. I just want to know what are investors thinking? What are they waiting for before really giving in all the money that is expected to flow in?
So we just hosted our investment conference, the Access Asia conference in Singapore last week. We had about 220 corporates and about 1,600 investors, a pretty big conference. And usually our conference is a great barometer for what investors globally are thinking about markets and what the hot themes of the day are. This was on the 19th of May. Okay. This was just after on the Monday, just after the Friday of the election. A lot of thought went into the timing, Menka. And what we saw this year was India was really the main agenda item, really on the minds of everyone at the conference. Interestingly, many people before the election when asked, many investors when asked, what are you doing? So we're waiting to see what's happening during the election, after which we'll allocate funds. The election happened now, people are saying it's too expensive to allocate funds. What I would say is markets overshoot, markets undershoot. I think what's important here is the medium-term prospects that one should be looking at.
Is it too expensive to allocate funds?
If you look at a target of 30,000, is 24,000 too expensive?
I think it depends if you're looking from an investment point of view or trading point of view. I think if you're looking from an investment and an asset allocation point of view, what you'll see is over the medium term, a number of these sectors are going to receive incremental investment. A number of the blockages will be unlocked. Picture this scenario. If we went from a 5.5% growth rate to an 8% growth rate, what that will do for many of these sectors. So again, depends on the kind of investor you are and what your time horizon is.
So, ab ki baar 30,000 applies to the year end, the next year. What is the time horizon, according to you, for that kind of gain on the Sensex?
First, I would say is achhe return aane wale hai. So, I would say over a period, and our strategist Abhay Lajawala has put out a piece that said 28,000 by year end. Yeah. I think the ab ki baar 30,000 is much more a medium term view, which is to say that once you start seeing structural reform get done, and it is a process, this is not an event.
Sure.
Once that starts feeding through into earnings, which I think is going to be calendar 15, 16, 17, I think that's when you'll see some of the earnings gains come through.
Can you identify for us 2 or 3 things that you hope to hear this government speak of, lay out a credible roadmap for over the course of the next 3-4 months? So I won't put unreasonable expectations on the first budget. I'm not looking or suggesting that we're going to see big ticket disinvestments in the next month or 2. I'm not putting anything absurd or too ambitious out there. What is the minimum basic stuff that you need to hear to stay invested in that ab ki baar 30,000? And I'm going to repeat this ad nauseum.
Sure.
Ab ki baar 30,000 philosophy.
So I will frame that just in terms of the amount of low-hanging fruit that can be looked at right now.
Sure.
If you look at China and India, and I understand that China is quite different from India, the systems are quite different. But as an analogy, 30 years ago, Chinese GDP was $6 billion more than India. 20 years ago, Chinese GDP was $156 billion more than India. 10 years ago, it was $1 trillion more than India. And last year, it was $6.4 trillion more than India. Put that in perspective of Indian GDP being around $1.9 trillion, and that just tells you, if we just closed a small portion of that gap, what a material difference it could actually make to the economy. So I think the number of things that the government could do are actually immense.
I know, but
give us the low-hanging fruit.
Yeah,
What
because we've discussed this whole closing a bit of the gap. Look, there is so much low-hanging fruit. There's so much we can do just to get from 5 to 7%. It's the getting done bit, right?
I would say, I mean, a number of things that the government can look at. If you start with the power sector, the cabinet announcement, combining power coal, quite welcome. That's a place where we've had a big disconnect in the past. The supply side blockages for that sector are quite immense. The 30,000 megawatts that you've heard about of idle supply that's potentially waiting to be tapped. Those are examples of blockages that can be released very, very quickly in my mind.
Okay. So that's unlocking that whatever number, 2 lakh, or 22 lakh crores, or 6 lakh crores, or 13 lakh crores of projects that are stuck. You talk to different people, get different numbers. So that is one of them. So give us something else.
Inflation. Inflation is a big focus for this government, as you've heard. I have no doubt that this will be one of the priority items that they will look at.
These are all 6-month, 1-year things, aren't they, Dixit? There's nothing's going to happen in the next 3 to 4 months. I'm just trying to understand what is it that you're telling your clients in terms of the expectations they should have regarding the announcements from this budget, and therefore how they should pace their investments into this market.
So I think what we're looking at is some of these measures can actually materialize reasonably quick. Quick means not in a month or two. I think these would take 3 months, 6 months. If you look at, for example, food grain supply, running at something like 2 times the required amount right now. Is the government likely to do something around that?
Okay.
Quite possibly. What we are telling our investors, to answer your question, is really watch the July budget.
Okay.
Oh, you are.
And
so you're putting some
budget.
expectation on that.
Watch it for what?
Absolutely. For actually actions to address some of these issues.
Okay.
So, for example, widening of the tax base. Are we likely to see action during July budget? Quite possibly.
Okay, I wouldn't share the same ambition, because I think, many people you speak to in business, for instance, if you were to take a cue from what they've done with their cabinet formation, many people were more hopeful of a more cohesive, coherent strategy that is evident in the cabinet formation, which may not have come about. So maybe they're still looking at a second round of cabinet appointments, which gives you the indication that maybe they don't have everything prepared as we had anticipated. Maybe they too are a little taken aback by the magnitude of the mandate that they got, and they're still sort of working their way through what they can push or what they can't, right?
I take a slightly different view, Mehta.
Okay.
I would say that that the issues are quite well known. If I take the company analogy, if a company, if India were a company, earnings growth has been diminishing over some time. Shareholders have been agitating for some change. Morale is quite low with the staff, etc. I can belabor this analogy. And what you have now is you have a new CEO. Normally, you'd give a CEO 6 months to actually figure out what the issues are before he comes up with a 100-day plan and puts that in place.
Right.
I think here the issues are very well known to the leadership at the center. And I think what you're going to start seeing is real execution come through. All I would say is patience is required. If we really want to get the GDP growth rate back up to a level commensurate with our population growth, reflecting our demographic and our potential, I think we'll need to wait for 18 months to 2 years. If I look at the Margaret Thatcher experience, not trying to read everything into the Margaret Thatcher experience, but if you look at that, it took probably between 18 months to 4 years, depending on the type of reform, and then you experience a bull market over the next 10 years. So potentially that's what we'll see.
Are investors willing to be that patient in this case?
I think investors will need to asset allocate into India for a couple of reasons. If you look at where emerging markets were a year ago, the fragile five is what we talked about. At that time, really, they all shared roughly the same characteristics. Twin deficits were an issue. Capital account was a problem for most of these countries. Now look at within that camp how India has actually differentiated itself. The capital account actually now has reversed. The rupee has actually done quite well.
The Rajan trade.
Rajan trade, we've done actually. So we've started coming out of that, and we've pulled away from some of the other emerging markets. Add on top of that the change here that we've just witnessed, and that makes for a very compelling investment destination.
Okay.